Hello, and welcome back for the third and final installment of Larry Edelson's Final Forecast. This is Mike Bernick, editor of Real Wealth Report and E-Wave Trader. On October 7th, 2015, Larry's cycle analysis showed that the world had entered a new phase, one in which governments could no longer amass unpayable debts with impunity. Larry's forecast was clear. This great global debt crisis would level Europe and Japan first. By doing so, it would cause trillions of dollars to flood into U.S. stocks. He predicted that this tidal wave of new money would drive the Dow to unimaginable new highs, to 20,000, 30,000, and ultimately over 45,000. In just a few moments, I'm going to give you a behind-the-scenes look at the new E-Wave Trader model in action by analyzing 3 trades that we're tracking right now that we could release to you at any time. We'll show you exactly how this powerful tool can help you magnify your results with the potential to deliver gains of 315%, 402%, even as much as 772%. But first, Larry always began with the big picture before drilling down to specific investments. So let's set the stage. Larry warned us that America's total debt is far greater than Europe or Japan, and that our nation would ultimately pay that price. However, U.S. investors would have until 2020 to take advantage of the initial surge in stocks thanks to this tidal wave of foreign capital flowing into our markets. But shortly before he passed away, Larry made a shocking discovery. He realized that the E-wave had accelerated. It wasn't the first time this has happened. The advent of new technologies have shortened the amount of time between the peaks and valleys of the E-wave. It happened with the invention of the railroad, for example, the discovery of electricity, and when we became an oil-based economy. And now, the age of the internet has caused the cycles to accelerate once again. Larry realized that we do not have 3 more years to profit from soaring stock prices or to prepare ourselves for the ultimate crash. Due primarily to a worldwide rejection of globalism, the wave has accelerated. This great crisis is likely to strike us next year. June 6th, 2018 will mark the beginning of a new phase in which all Americans will pay the price for Washington's unpayable debts. Now, for most investors, this is devastating news. For you, it can mean good news and even better news. It means you now have the opportunity to confidently maximize your profits as U.S. stocks continue to surge and as gold soars. It means you can anticipate the coming crash and get your money to safety well before it blindsides most other investors. And it also means you can use inverse investments to harness the massive profit potential available when stocks and other assets finally do collapse. In our last webinar, we showed you the second pillar of Larry's E-Wave Trader model, how he designed it to use historical events of the past, like the Great Depression, to confirm the accuracy of his cycle forecasts for future events, and also to help us identify the investments most likely to lead the pack in terms of performance. We saw remarkable parallels between the events of the 1930s and the news we're reading in today's headlines. We studied the misguided policies of the past that only served to prolong the Depression, and we see history repeating itself all over again today. Most importantly, we identified 3 investments that are most likely to outperform the markets over the next year. And that brings me to the third pillar of Larry's E-Wave Trader model, how we identify ideal entry and exit points for each trade, when you should buy and exactly when you should sell. It's all thanks to the miracle of Larry's unique approach to technical analysis, using chart pattern recognition and time-honored tools of the trade to identify upcoming lows in markets so you can buy low, and also using those same patterns to identify upcoming market peaks so you can sell high. To help me better explain our system in action and to help us answer the all-important question of market timing, I'd like to introduce you to John Isaacson, Senior Financial Analyst of E-Wave Trader. Welcome, John.
Thank you, Mike.
Now, tell us a little bit about how you first met Larry, what he taught you, and how you came to be such an important part of the team here.
Well, in college, I took a technical analysis course and have been hooked on it ever since. I became an affiliate of the Market Technicians Association and devoted years and years of market study across a wide array of asset classes and market cycles. In my opinion, price action often offers clues about where prices are going before fundamentals.
Sure.
I met Larry in late 2001. I found his contrarian view of the stock market refreshing and quite intriguing. I mean, we seemed to click right away, and I joined his team in early 2002. And I learned a great deal from Larry over the years, including independent thinking, an analysis, rigorous analysis of history, fundamentals, and technicals. You know, the one thing about Larry that I always admired was his conviction in direction. And as I've learned, that's really the key ingredient needed to exploit your edge in the market. It will pay you handsomely when right, and more than pay for a number of losing campaigns. It wasn't until years later that this experience was crystallized in my time on the Chicago Board of Trade trading floor.
That's fascinating. And we all learned a lot from Larry, a great deal. But that's something that you and Larry actually both have in common professionally, is you both cut your teeth right down there in the trading floor, right where all the center of the action is. Larry trading gold in New York, of course, and you at the CBT. And as a little aside, though, on a personal note, didn't Larry introduce you to your wife, correct?
Yes, that's right, Mike. I certainly owe quite a bit to Larry.
Yeah, a wife and 2 kids, with more on the way, probably.
No, not so fast.
We all owe Larry a lot, that's for sure. Okay, let's get into it now. So the first pillar of Larry's approach identifies the current cyclical trends, as well as what comes next. The second pillar, historical analysis, that confirms the cyclical forecast, and importantly, it identifies the investments that are likely to lead the pack in times like these. And the pillar we're discussing today, the third pillar, identifies the optimum entry and exit points for each investment. And that's the critical timing aspect, right, John?
That's right. Everyone knows that the whole objective of investing is to buy low and sell high.
Right.
Just do that and do it consistently, and there's no limit on how much money you can make.
Yeah, it sounds easy when you say it fast, but of course in the real world things can get very complicated by the markets.
Absolutely, and especially when you factor in a barrage of news events that play with your emotions, it's not always easy to know when a stock or ETF is a good buy or when it's time to sell. Fear and greed get mixed into the equation and often complicated. So to identify the optimum entry and exit points for each trade, Larry taught us to rely heavily on technical analysis, the study of key chart patterns. One of Larry's favorite tools for triggering buy and sell signals is called the Andrews pitchfork.
Now, most of our audience is probably wondering, what the heck is a pitchfork anyway? I mean, we're not bailing hay here, so please, for the benefit of our audience, explain.
Absolutely. The pitchfork approach to technical analysis uses 3 parallel trend lines to identify levels of support and resistance for each investment.
Okay.
Now, together, these trend lines determine the lowest and highest levels each investment is likely to achieve.
I've got it. Let's explain how to use this powerful indicator step by step.
Certainly. The first step in pitchfork analysis is to determine the initial price high or low to begin the analysis. Now, textbooks usually recommend using the extreme low or high of a move, but not Larry. He would begin the analysis on the last swing low or high before the extreme low or high for the move was made.
Now, why was Larry's approach unique?
Well, I'll tell you why, Mike. In an uptrend, the initial up leg of a new bull trend appears to have a close relationship to the final phase of the bear trend that preceded it. In this fashion, pitchfork lines provide a more realistic or tradable support and resistance levels. They're driven by a real assessment of market psychology through actual prices. We'll get into this point a little bit further on when we start looking at some charts, but support marks an area of demand for a security, at least enough to temporarily halt the price decline.
So this key support level then, it gives you the price at which investors may rush in to buy the security.
Well, that's sure as hell what we're trying to do, Mike. This is the level at which the stock has fallen far as it can for now. Investors find it irresistible. They buy and the stock stops falling or bottoms and then turns the corner. Now, this is the ideal moment to buy the stock or the ETF. You might consider this kind of a shakeout or the final capitulation in a move where the last bit of weak hands are pressed out of the market. Could be margin calls, what have you. That's the entry point we're looking for. The moment at which the E-wave model issues an urgent buy signal. Notice that in a rising trend, support levels are progressively higher. Now, the opposite's true. in a declining trend.
Okay, so step number one is to connect these bottoms. And by
Right.
doing so, we begin to identify a fresh uptrend. That's pretty straightforward, right? Now, let's talk about resistance to the upside.
A resistance area is an overhead concentration of supply, which is sufficient to turn back and advance, at least temporarily, kind of arresting the advance. The stock or ETF is telling you the level at which investors are becoming wary and taking their profits. This is the level at which the stock has risen as far as it can for now.
So once price rises beyond a certain level into this resistance zone, as you said, investors find the urge to sell. It's irresistible. They unload their stock, maybe to take profits. The stock stops rising or peaks and then usually rolls over, right?
And this is the ideal moment to sell the stock or the ETF, the exit point, the moment at which the E-Wave model issues an urgent sell signal.
Okay, John, let's also cover why this timing accuracy is so important to Larry's E-Wave model and why it has the potential to significantly boost our trade results.
The importance of this analysis is that it provides another degree of confirmation with our cycle and historical analysis, a three-step process of checks and balances that stacks the odds even more in your favor than ever before.
Okay.
Now, if we're virtually certain an investment will behave like we predict, we can go for the jugular with more aggressive investments like options and leveraged ETFs. This is the final piece of the puzzle.
It's a beautiful thing. When all three pillars work in tandem, our trades are more powerful and more accurate than ever before.
Well, that's what we're going for. And exactly, our pitchfork analysis provides precise entry points to take advantage of twists and turns in the market in question, catching the squiggles and the wiggles. It helps you dramatically increase your win percentage and your overall profit potential. But perhaps more importantly, it provides levels to abandon positions that aren't working as planned. Now, these are areas where the market should not go, but if they do, you simply move to the sidelines and reevaluate the trade.
Okay, so let's look at three specific investments that we're tracking right now in real time that could come as trade alerts at any moment for E-Wave Trader members.
Absolutely. Silver, of course, has been a frequent trade recommendation from Larry using various ETFs.
In fact, we're long iShares Silver ETF right now, SLV.
Well, here's the pitchfork analysis of a recent recommended trade on the ETF that closely tracks silver prices. If you take a look at the chart of USLV, the market bottomed in late November. You can see that's where we start the pitchfork analysis. The market made a little bit of a reaction before pushing into a new low for the move right before the end of the year.
Right.
What I want you to do, turn your focus toward how the market oscillated around that middle trend line, producing a buy signal on a challenge in late January. And you can see there with the arrow, and then had a nice profitable trade to the upside that was closed out in early March.
Right. Right on target.
Yeah, the actual result of the recommended trade was 22.5% gain in less than 1 month.
Wow. But using the magnified profit potential of the new E-Wave model, you could have earned even bigger gains than that, correct?
Yes, Mike. By getting more precise with the timing of your entry and exit points, you could have earned 315% gain with a well-timed option trade.
Wow, that's significant. 14 times more profit potential than the actual trade in USLV, and that's all thanks to our E-Wave model. Now, in our last briefing, David and I also pointed out how we saw these huge gains from both gold and silver stocks during the 1930s, and we think we're about to see that again. Homestake, for example, was up 450%, and Dome's mines soared over tenfold in value, a gain of over 1,000%.
Huge.
And that was, of course, a lot better than the Dow's overall rise of 371% during that same period of time.
Mike, well, we're just at the beginning of a major move higher in silver. Larry's forecast target is $125 an ounce, and that may be conservative. Plus, silver has pulled back again with our cycle forecast indicating another move higher is just ahead. So we're very close to pulling the trigger with a new trade.
Right. Now, just as soon as we get the signal, of course, from our E-Wave model, so don't jump the gun ahead of time. In the meantime, though, let's look at another trade that we're eyeing right now.
The next one should be familiar to our viewers. It's the euro currency.
Yes, indeed. Larry was on record years ago warning that the euro currency was doomed.
Recently, Larry recommended shorting the euro by using an inverse ETF, the ProShares Ultra Short Euro ETF, or symbol EUO.
Now, that's an ETF designed to go up as the euro collapses, we should point out.
Yeah, that's correct. Yeah, here in the EUO, you can see a nice clean buy signal given in September of 2016 with a rather sharp move up, highlighted by the arrows, where Larry took profits in December. The actual gain from this recommendation was about 15%, but by more precisely pinpointing support and resistance in the key entry and exit points, however, you could have purchased call options on the EUO that would have delivered gains of 400% in just over 2 months' time.
So thanks to the E-Wave model then, you could have magnified the gains from this trade more than 20 times over in this case,
That's right.
up to 400% gains compared to 15% originally. So John, let's look at a third trade that we're monitoring right now.
Well, absolutely, Mike. Another actual trade Larry recommended last year, AK Steel.
And you know, in our previous briefing, David and I talked about how much steel plus other resource and industrial stocks far outperformed the market from 1932 to 1937, that last historical comparison. Bethlehem Steel, for instance, rose over 1,200%.
And you know what, Mike? It appears that the sector's hot again right now. In fact, we're tracking several potential trade alerts in the group. Here's the pitchfork analysis on AK Steel. And Mike, this chart of AK Steel shows the pitchforks at work. You can see in early November, prices oscillated on the lower support line of the pitchfork, producing a nice clean buy signal right before a sheer vertical move in AK Steel that produced an exit when we challenged resistance in late November.
Now, the actual gain on Larry's recommendation, AK Steel, was 55% in just a few weeks, which is a great call on his part. But using the more precise E-Wave model, you could have boosted those gains, correct?
That's right, Mike. A call option selected with the aid of Larry's new model could have handed you gains of 772% in just 2 weeks.
Wow, very impressive. And we could be pulling the trigger on AK Steel again, or another stock in the sector, pretty much at any time. Great work, John. Thank you for helping us out with this pitchfork analysis today. Great stuff.
Absolutely, Mike. My pleasure, and thanks for having me.
You bet. So now we have confirmation that the crisis Larry predicted by these age-old economic cycles is very real, and that it's coming much sooner than we expected. We also have clues as to the sectors, industries, and 3 individual investments that are most likely to lead the pack for the rest of this phase, until this crisis comes to U.S. shores in the second half of next year. And thanks to John's help, we even have the optimum entry and exit points all mapped out in advance for each of these trades. As we've seen, the 3 trades we discussed today in this program have the potential to deliver gains of 315%, 402%, and as much as 772%. Now that's enough to turn a $10,000 investment into $41,500, $50,200, up to $87,200. Right now, we're just biding our time, waiting for the optimum entry signals on these trades. But the green light could flash at any moment now. And if you're not already on board, you'll miss out on these all-important buy signals. And there's more. My E-Wave Trader team and I are also eyeing a dozen more trades right now with the potential to multiply your profit potential 20, 30, up to 50 times over. And as soon as we get the green light, we're going to rush you easy-to-follow instructions for making those trades to members of E-Wave Trader. E-Wave Trader is the only wealth-building service on the planet using Larry's own time-honored 3-step approach to cycles analysis to maximize your profit potential. Please click the button below this screen to review all of the privileges you'll get with E-Wave Trader. I'll even show you how you can receive a full membership in E-Wave Trader absolutely free. So please, click the button below this video now to see how you can join E-Wave Trader for free. On behalf of John Isaacson and E-Wave Trader, this is Mike Bernick. Thank you for watching and good investing.